Hello and welcome to today's webinar hosted by FinExtra in association with CGI. My name is Graham Buck. I'll be your moderator for today's session. Today I'm wearing my FinExtra hat, but I have written for or edited a number of Treasury publications over the years. Most recently, I was cash management editor at Deutsche Bank. Today's topic, real-time goes global, expanding revenue potential beyond borders, is of interest because I've had a sneak preview of a forthcoming Deutsche Bank white paper on tomorrow's Treasury, and quite a large section of that is devoted to the implications of real-time going global. Real-time cross-border payments are now making traction. Perhaps surprisingly, the USA has been a little bit of a laggard, but even that is seeing strong growth now. Data suggests that in 2023, nearly 1 in 5 cross-border payments globally was in real time, and as soon as 2028, that number will be more than 1 in 4. To tell us about the potential and also the challenges of real-time going global, we have 3 distinguished speakers today. Ainsley Ward, Vice President, Business Development Payment Solutions at CGI. Michael Evans, Managing Director, Global Head of Payments for Delta Capita. And Vijay Anand, Regional Head, Products, Digital Payments and Processing for MasterCard. So welcome to all of you and thank you for participating. We'll also be conducting 2 audience polls with a link for all of you to participate. During the session, there will also be the opportunity to raise points and submit questions to our speakers. So to kick off, we have several main discussion points. One of them being the impact already being value payments networks, principally SwiftGo, IXB and Nexus, and how they are revolutionizing low-value cross-border payments. I will look at what banks should be including in their investments on domestic instant payments developments so they can take advantage of these new global interconnections. Say a little bit about the cost savings and revenue enhancement opportunities available to those financial institutions who are willing to expand their horizons and take advantage of this rising consumer demand. We'll go on to how the simplicity and speed accompanying the new ISO 20022 standards and the richer data exchange functionality will offer opportunities to those wishing to enter. And last but not least, perhaps look at what's to gain, but also the pitfalls of taking the plunge now and investing rather than waiting till later. Ainsley, perhaps you'd like to kick off and give us your views.
Certainly, and thanks, Graham, for the introduction. I think what's really, really interesting at this precise time is that we are slowly all completing our ISO migration as an industry. So November 2025, absolutely everybody will be finished with their ISO migration. Certainly, but we've not yet had the full discussion on how we get the value out of ISO 20022 and the standards that have been implemented around the world. A lot of the discussion so far has been focused on the data that's available in these transactions, but I believe the true value is in interoperability of those payment messages because they're all based on standard formatting and standard component blocks. So what's going to happen is allow the opportunity to disrupt a lot of the traditional ways of making cross-border payments. And this is where I think the real interesting pieces will happen. So some of that legacy that we've had in this space and the legacy cost base in cross-border payments, some of the remittance systems that are built up over time, we're now able to start to look at how those come apart. And as you mentioned, Nexus, IXB, SwiftGo are some of the first initiatives. Of course, Visa and MasterCard have been in this space for a very, very long time, and we'll hear more about that later. But also, the change is going to create a bit of a war as we go forwards, and a positive war in this respect, because we're looking at the different formats that are going to be available to financial institutions, how they can start to take advantage of those, and how they can look at building this forwards. I sometimes compare it a little to the videotape wars of the 80s, and that shows my age a little, and apologies for that. But you have to look at which of these is going to be a VHS, which of these is going to be Betamax, and which of these is going to be the dreaded Video 2000. So those are the kind of things we're going to look at today as to where the opportunity really is, how we extract the value from the millions we put into the ISO 222 migration, and where that's going to leave us going forwards with cross-border payments.
Excellent. Thank you very much for that, Ainsley. If I can go over to you, Michael, for your thoughts.
Thanks, Graham, and thanks for inviting me onto the panel. And I suppose another take that we can look at is with real-time payments is if we look at customer expectations over the years has increased greatly. And I think that I was discussing this the other day around how everyone now expects the Amazon delivery of everything, where you've got the shopping cart and it basically is delivered instantly. And I think what we're seeing in the financial services industry and also focusing on payments, everyone is expecting things to be real time, frictionless. And as Ainsley mentioned, that the industry has been spending a lot of money on the ISO implementation, and now we're looking at the reward. But I think that what we've also seen is a greater industry collaboration to try to get there, because everyone understands that as an industry, if you're only, I suppose, as strong as your weakest link in I suppose when you're passing messages and payment messages across the industry to try to get a payment across the line. So I think we're definitely seeing a much wider industry collaboration, and there's a number of initiatives as Graham and Ainsley has mentioned, and there's no doubt going to be many more coming up. And I think we'll probably touch on some of the domestic real-time payment schemes that have been emerging through a number of different countries, which is super exciting and interesting to hear. I think this is coupled with some of the emerging technologies that are being out there, and also and whether the banks are actually, how they are investing, and are they investing on the right infrastructure to be able to kind of leverage the kind of the new way forward. I think so. I mean, that's probably my starting point, and we'll dive more into a number of areas after that.
Excellent. Thank you very much, Michael. And over to you, Vijay.
I think it's a great time for all of us, because real-time payments are now a real-world reality, because nobody is ready to settle for anything less. It is a watershed moment for all of us, because what has happened is we have seen almost 70 immediate payment system going live. And what it has done is people have learned a lot of lessons. They have learned what are the right things to do. And we have great success stories. If you take how the industry has evolved, it has moved from the phase of early adoption to active acceleration, and it is now leading towards maturity. So there are a lot of points which we can take it from the success of the immediate payment schemes going live for the domestic payments. And the question is, how do we link it together? Are we going to be able to make cross-border really borderless payment? How do we make sure that we handle the technical differences, business rule differences, as well as regulatory changes? How do we club it together? And ISO 20022 definitely harmonize the payment. So these are one of the levers which we have to really take into account. And what seems to be happening is we have to take what has really worked for the real-time scheme, which has been successful. The examples being UPI. UPI is a great example where we have 350 odd million users using in India, 340 million QR codes, and it had a mind-boggling 130 billion transactions which got processed in 2023, which accounts for almost 45% of the global real-time payment transactions. So these are the stories which we have to really see how exactly we make a system which is resilient, because the basic fundamentals remain the same. The payment has to be secure, it has to be fast, it has to be cost effective, and it needs to be transparent. And what we are trying to do together is make sure that how do we handle the regulatory nuances of the different region and make it a unified payment system where all of the world can come together. And with the advent of e-commerce, we definitely are seeing that it is an immediate need for everyone to really make it happen. So what we are seeing is active collaboration is going to be one of the key. Merchant initiative where we are trying to make sure that everybody sees the value in that, and open and inclusive payment ecosystem. How do we come together and make it? So it is an important time for all of us to collaborate, take the lessons learned and best practices from the way the real-time payment systems have been adopted and take it to the next level where we will be able to really see the value of the infrastructure that has been built in. It always backend capability normally doesn't decide what your system capability should be. But in RTP, it is absolutely essential that your front-end innovation is always going to be backed by the sound foundation that has been built in by the real-time payment system. And that is what we are seeing and going to see as we see the next phase of adoption, that is the cross-border payment.
Excellent. Thank you very much, Vijay. And just a reminder to the audience, if you have any questions arising from those opening remarks or any points you'd like to make, please feel free to submit them. Now, as a novice moderator, I've had nightmares where I get so involved in the discussion that I forget to launch the 2 audience questionnaires. So we'll go live with the first one, which is question 1. When considering your main data store for payments, is it A, ISO 20022 native, B, proprietary but based on ISO 20022, C, based on the payments being processed, i.e. domestic standard, or D, completely proprietary? If you could use the link to answer one of those, and we'll come back to it a little later. Great. Now, moving on to the main discussion. Start again with you, Ainsley. I think you've said that with real-time now implemented in many countries and the rollout of ISO 20022 due to be completed in little more than a year, those who haven't adequately prepared will find themselves in trouble. And conversely, there's a realm of new opportunities that will open up to the pioneers, including cross-border commerce and travellers' remittances. Could you expand on that a little bit?
Yeah, certainly. Vijay mentioned some really interesting points around security, transparency, and the collaborative nature of these systems. So, trend that we're moving towards is that we are connecting existing real-time platforms rather than trying to create new global platforms. So if you look, that's what they're looking to do in their initiatives. So really, really important. But in order to capitalize on those things, legwork to make sure that you are able to process real-time payments effectively within your own organization. Making sure that your data is moving natively in ISO so that you avoid latency associated with translation engines. Making sure that you are doing real-time fraud and sanction screening, managing liquidity in more places. The more systems there are involved throughout these different options, the more places you may have to manage real-time liquidity. Accepting the API and externalized APIs and connecting to the world outside via API is now a matter of fact. I know Swift are launching their full API platform in the next few months. So we're changing the way that we even connecting to the Swift network, getting rid of the old hardware sags and moving into a new environment. But most importantly, particularly when it comes to cross-border, we're moving to a 24/7, 365 world. All of these things are creating a number of difficulties for organizations that are trying to connect into these systems, but they're problems that you'll have to solve if you're going to try and take advantage of any of these real-time payment systems on a cross-border basis. In fact, the 24/7 unfortunately becomes a fact of reality when we're talking about even domestic real-time payments, because as Michael mentioned earlier on, the sort of consumer demand to move money in real time, the immediacy that people are expecting, has to be found the clock, so people can buy things when they want to, send money when they want to, and are not tied down by the regular banker's hours that we all grew used to over the last 50, 60 years. So, I mean, I think it's a really important change to the way that things are going on. We know that there's a sort of a format war, and I hinted to at the start coming. So we don't know which of these initiatives is going to be the most popular globally. And if you, I liken it to the video wars of the 80s, primarily because it wasn't the best system that won. VHS was actually not a great system of video, but it had its backers. It was able to proliferate itself in the market. It was able to go forward and create a lot of forward momentum. And certainly as we look at these cross-border real-time payment systems, it's not going to be the best, most likely, that will win. It's going to be the one that is able to drive the most volumes, the most opportunity for the banks that are part of it. So that's
just
really
ask you one question,
interesting.
Can I ask you one question? I've read up a little bit about the three competing systems. I got the impression, maybe I'm wrong, that Nexus has made a lot of traction in Asia, and perhaps the other two are a bit more concentrated on Europe and North America. Is that correct?
I think, yeah, there's probably hinted at it earlier on that the billions of transactions happening in real time in the Indian market is supremely interesting if you want to win this format war. So going after the volume markets from day one makes absolute sense for delivering these kind of systems. We know that there's a lot of remittance corridors that flow from markets where people earn higher salaries into markets where they tend to earn lower salaries, whether you have a lot of migrant workers. So that international remittances market also becomes very interesting. But the change in these systems, again, as Vijay mentioned, the QR code based payments that are replacing or at least complementing POS payments. If you can do those on a cross-border basis, not only are you disrupting SWIFT and Western Union and MoneyGram, you're starting to now like Visa, MasterCard on their card side, which is why I think they've already made the moves into these international payments. So it's a really sort of interesting play for where the payments are to potentially determine that final winner.
Excellent. Thank you for that. Michael, when we spoke the other day, one of the points you made was the differences in the regions. And you mentioned that in Africa, the telcos have made big strides, basically due to the lack of infrastructure there, and become payment providers, while the USA's got up to a fairly slow start. It's just really, with the launch last year of Fed now, that it started to gain momentum. Are we going to see more of a sort of leveling up now?
Well, and I think, I mean, we'll hope so. I think for US consumers, they want to they do want to have a faster payment scheme, which would be similar to the schemes like, as Vijay's mentioning, UPI has been an amazing success. We've seen other successes around the world, not just in Africa, but if you look at Brazil, I mean, similar stats to UPI, where I think it's 39% of all transactions are done through PIX. But then if you go into Africa, as we mentioned, again, every country comes from different infrastructure kind of baseline. So and what's happened in Africa, and I think the one in Kenya is probably the most relevant, where you've got M-Pesa, which is, I think I read the stat the other day, 98% of all money in Kenya is moved through there. So, which is an amazing stat. I mean, you couldn't imagine that in another country, that one sort of payment system is actually basically moving all money. So, so I think and then you start to get into, I suppose, some of the more other developed countries, like where you've got faster payment scheme in the UK has been successful, and now, as you say, the US they are a little bit behind with the clearinghouse, the RTP payment scheme, and when Fed Now service. And I think one of the questions that I think Christopher asked on the chat is, what is the secret sauce for making this happen more quickly in the US? And I think Ainsley and Vijay have kind of hinted at this, is making the faster payment schemes accessible and for the user to be able to quickly do it. So the QR codes, the mobile phones in Africa and in India have actually made it a much more accessible service, to be able to instantly do it. I mean, we can also talk about China, WeChat. I mean, most time, a lot of things are coming, a lot of payments are going through WeChat in China. So, so I think the secret sauce is to make it more, a lot of these real-time payment schemes more accessible for the users to be able to transact in, and because most of the times they are small or low-value payments, and being able to make that accessible. I apologize, I've been saying accessible a lot, but I think accessible and making that, it is going to make the real-time payments schemes in the US successful, not just in the US, but elsewhere.
Excellent, thank you. And turning to you, Vijay, what opportunities can the generic payments networks leverage from real-time, and what will be their challenges?
One thing which we all are witnessing is with the advent of the 70-odd real-time payment system, the non-cash is where the real-time payments is really gaining a lot of traction. And although the debit credit still continues to rise, but it is something which payment networks are definitely keeping a very close watch. We definitely are seeing the new innovative cases being put together in their strategy, because it is going to be the cornerstone for any strategy, real time, because you want to be in the mix, you want to touch the payments. The moment the electronic payment is happening, network wants to have a role to play, and it is by identifying the right set of synergies, identifying the right set of use cases, because whatever learnings, use cases, success stories that has been on the card rail, the schemes are very, very particular in making their role in the real-time mix as well. So there are different strategies, whether it is by pay by account. So form factor is becoming going to become a bottleneck. The idea is for everyone to have a role whenever there is a payment, whether it is through the fraud solution, whether it is through the email, whether it is through the onboarding, whether it is identifying, getting the data. Because once you have the data, you can think about giving more value, because it is going to be a fact that interchange is under pressure. You are in the world of real time on account to account. You cannot make payments by making payments. So the idea is, how do you give value back to the customer, and you have to be in the mix. So every network is trying to find out the strategies. Identifying the right multi-rail strategy is becoming the order of the day, where we are witnessing all the payment networks trying to find out different ways to have a role to play in the mix of all the domestic real-time schemes. There are integrations, there are collaborations which is happening with the internal system, and they are going to coexist, because as we see, there are going to be the carded countries like US, Europe, Canada, where will have a different role. The countries and the regions like India and Brazil, where financial inclusion has been the mix. If it hasn't been so much dominant by the cards, but in order for them to have a role in this huge development that is happening with the kind of volume which we are talking about, almost 15 billion a month in India, we cannot, the card network cannot let it go. So we are trying to find out the different ways on value-added services. Different overlay services are being thought about, and these innovative new use cases is keeping everybody together. So collaborate, communicate, and innovate. These are the three mix which are coming together, where all small and big players are trying to find out value which can be given to the end user for making the payments.
Great, thank you. I think we've got the results for our first poll in now. Interesting. So quite a large percentage for ISO 20022 native, just over 42%. Next comes based on the payments being processed at just under 29%. proprietary, but based on ISO 20022, 21%, and completely proprietary, just under 8%. A few thoughts from each of you. Are those results pretty much what you would have expected? Perhaps Ainsley first.
I would have expected ISO 20022 native to be slightly higher. Yeah, but this pretty much reflects how the industry is shaping up.
Yeah, and to be honest, 3 years ago, the results would have been entirely flipped. So I think it's just shows the depth of work that's been going on, and the realization that people have had to make the move to this standard, not only for regulatory reasons, but because there is advantage to be taken. And now here we are talking about what the opportunities are. So I think this is a good news story for our industry.
Yeah. I think it'd be interesting to do another filter on this of the size of the institution who's answered this, because some of the industry events we've ran, we've seen many different answers to this question around, where is their main data store, whether it be not ISO native or customized, because it depends on the size of the institution that actually is answering that. So, but yeah, interesting to see the stats.
Great. Right, moving back to the discussion. Ainsley, real-time offers the big banks, which have been perhaps lagging a bit, an opportunity to catch up, but possibly could also see the demise of some of the smaller banks that lack the deep pockets of their larger competitors. I think you've mentioned we might also see a further shrinking of the correspondent banking space.
Yeah, absolutely. I think what's really, really interesting is that there's now a challenge to the old model. And the old model used to be that we had an organization in the center, so the SWIFT and the card payment networks, and they used to receive all the payments and they used to send them to each country, and then there would be a chain of banks in order to get those things out. Because we're starting to connect directly the domestic real-time networks, those sort of traditional chains are starting to disappear. And because the power is in the domestic networks rather than in some international body, it means that we're organizing ourselves very, very differently. So banks that have thrived on that correspondent banking model, who are not necessarily the biggest banks in the world, there's about 400 major correspondent banks globally, good profits, and well done to them for the past 30 odd years. But that model is now starting to get eroded. So it's going to be really reinvent themselves. Further, this is going to be a bit of a volume game. So people will go to the banks that are able to connect to as many different systems and therefore get money to where it needs to more quickly, as we've seen in other markets. So as this sort of transforms, we may see greater consolidation because the costs of maintaining multiple real-time connections are not necessarily viable for smaller banks, and therefore they fade out of the system if they're not able to keep track with this. So I think we're at a time where changes in the network are starting to generate changes in the banking infrastructure as well.
Right. I'm going to move on to the subject of artificial intelligence. Michael, how is AI being applied to real time? And can the ability of fraudsters to use AI in targeting real-time cross-border payments be limited?
So I don't think you can have a webinar these days without talking about AI, because it's a common discussion, and I'm lucky enough to wear two hats at Delta Capital, where I do look after the data, tech and automation practice. So I do actually talk with customers day in day about they do need AI, but what do we do with AI? But also it often comes down to data quality at the end of it. But I suppose, in AI with real-time payments, we did run an event, an industry event with top-tier banks and mid-tier and small-tier banks in May this year, and we spoke about this exact topic. And I think we've been actually using AI in, I suppose, the payments ecosystem for many years. If we were to categorize kind of more predictive AI and kind of the Gen AI, which has been big burst of discussion the last kind of this year. But the predictive AI piece, we've been using predictive AI in everything from fraud detection and transaction patterns, and also using customer support elements around using AI. So compliance monitoring we've been using around ensuring that transactions are compliant with regulations. So and we've also started to see AI. We've already seen it being used in personalised services across the real-time payment scheme. I think the most interesting bit about AI is that a lot of people talk about it's accelerating productivity, but just as much as we are able to accelerate productivity and efficiency within, say, a payments ecosystem, fraudsters are also having the same sort of tools. So they actually are able to not just be able to try and target sort of a payment system, a few transactions a second. They're able to do millions of transactions targets a few every second. So we do need to be resilient in making sure that, I suppose, utilising AI to get ahead of the fraudsters. And I think it's probably just to also add on some of the measures. I think that Ainsley and Vijay were talking about, that how do you make sure that things are secure? And I think that we're already starting to see that across the industry with, pre-validation services and confirmation of payee services that are starting to come in to try to help, try to alleviate some of the kind of the fraud risk across real-time payment schemes. But yeah, happy we could speak for most of the session around AI, but I think that's just a kind of a high level, broad brush.
Great, thank you. Turning to you, Vijay. Preliminary discussion we had the other day, phrase came up, the potential real-time has the potential to disintermediate the disintermediators. Could you say a little bit more about that? Is it a likely scenario? And if it did, who would be the potential losers?
I think it is all about evolving, because the old model won't work anymore, because now the roles of intermediaries is going to diminish in the traditional world, as we were just discussing about the example of being correspondent banking. The idea is wherever they were adding value, whether that remains relevant in the current real-time world, it may not be. So with the reduced settlement time, with the increased transparency, where better clarity about the currency conversion needs and all, it is important for all the players to evolve. Intermediaries also have to evolve, try to work with the fintechs, make sure that they add a value in the ecosystem, because in the entire chain of payments, entire leg of payments, everyone has to really play a role, and it has to be clearly positive in terms of giving more comfort to the end user, giving more value to the end user, and giving more transparency when it comes to the cross-border. So the way I see is it is a time for the industry on different players to really reevaluate their roles. And as the world is shrinking, there are new, you can say, standard operating protocol that will come in. The new focus areas for these players would come in, and they will have to find out what they are best at in the new chain of things when it comes to cross-border payments. Because otherwise, if you are continue to be the traditional intermediaries, you are not going to have a role, because a payment will be in flash, and the value which you were bringing in will no longer exist. So that is one thing which is very, very important. How do you add value? When we were talking about AI ML, it is important that when you are deciding about the partners, how do you bring in the value? How do you get the data? And what do you do with that? What is that the end user is looking at? How do you bring out that confidence level for every transaction? So wherever you had been touching the payments, you have a wealth of data. You have to reinvent yourself, try to see in the new steps of payment, what is that will be something additional, because it is all about defining that uniqueness in the flow, in your offering, so that you continue to really innovate and give something new when it comes to the use cases, because old use cases are no longer going to be valuable. And we are working in a new world where we have to reinvent ourselves, reinvent the roles, and look at the ways for justifying their existence. So it is the time when, and everybody has already started working towards that. It is with the next initiative like Nexus coming in. We already are seeing good tractions being made where payments are being made in Flash. If you look at the Swift GPI, we are seeing almost 70% of the payments are coming in less than 30 minutes. So with that kind of speed, all the need of intermediaries is going to diminish. So you have to find out new ways to stay relevant in the game.
I think you've got some thoughts on this issue as well, Ainsley.
Yeah, absolutely, and it's absolutely the right phrase, disintermediating the disintermediators, and that's the first time I've said that without tripping over, so I'm quite happy. But I mentioned earlier on players like Western Union, MoneyGram, and even Wise. So Wise is a business that grew to fill the gap between SWIFT payments, international remittance providers, and found a gap, and have grown massively to disintermediate those players. But the reality is that the joining of international, of domestic real-time payment systems will potentially destroy their business model as well. This is already looking a long way down the road. Visa, MasterCard bought into the real-time payment system probably in the last 10 years. So you saw acquisitions of Earthport, acquisitions of Vocalink and of Nets. So some the models that existed as they were don't necessarily have longevity to it, and we're starting to see now, as those pieces come together, as real-time mandates start to happen in countries. We've just seen this SEPA instant mandate in Europe. We're starting to see mandates in other countries, coupled with the ISO migration nearly completing, coupled with the change in consumer behavior that was mentioned earlier on, and those things are starting to come together to build the ecosystem that makes.
Right. Anything you'd like to add, Michael?
No, I agree with the guys, and I think what we're starting to see, industry collaboration is the key thing, and so yeah, nothing more to add on complimenting the guys.
Right.
It's collaborate and conquer. Now, what I was saying is it is collaborate and conquer rather than compete and collapse. So it is world coming together.
Great. I think we'll come on to our second audience poll. Is your organisation ready to meet the challenges of cross-border real-time payments, 24/7 operations, ISO 20022 native, high resilience, high throughput? So we've got a range of responses here. A, absolutely, bring it on. B, we're almost there. C, we're working towards it, but we've still got a lot to do. Or D, this isn't even on our radar today. So if you'd like to use the link to send in your response. Excellent. Next item I'd like to pick up are the plans by more central banks to issue central bank digital currencies over the next few years. Though they've been fairly small scale so far. Will they make a big impact, do you think, or are deposit tokens and interoperability, will they contribute more to the rise of real time? Would you like to start off with this one, Michael?
Sure. So I think, I suppose it's just to point out the key differences between CDBCs and real time. Obviously, we have CDBCs will be issued by central banks, where real-time payments looking to be facilitated by mostly commercial banks and payment networks. So if you look at CDBCs, they're looking to operate they can operate offline, online, peer-to-peer, whereas real-time payments is looking to be online networks and intermediaries. So if you look at the other key differences, kind of CDBCs were looking to enhance the whole kind of overall monetary system, where real-time payments are really focusing on the speed and efficiency of payments in those circumstances. So I think I think every central bank is experimenting with CDBCs at the moment, and I think what we're going to see is that's more of a longer-term approach. I don't think we're going to see in the short term. But what we have seen is the deposit tokens has kind of accelerated its growth. Again, if we talk about what deposit tokens are, these are traditionally issued by commercial banks. They're using smart contracts. They're using sometimes some blockchain applications to make everything more efficient. What you also said there, Graham, is interoperability, and I think what we're going to start to see, we'll see the rise. We're already seeing the rise of deposit tokens, and off the top of my head, the numbers I can't give the numbers of some of the larger banks where they are issuing deposit tokens, but they are in the millions and billions. But what is going to be interesting is how those deposit tokens are going to be interoperable. And whether that we can actually see an interoperable deposit tokens, and then moving forward to the longer term there's a lot of discussion around this at the moment around interoperability across CDBCs, and there's a number of pilots that have been run across different exchanges that and this is where I think the jury is still out whether you do need a central player to actually still be in between kind of the interoperability between two central banks. I think that's still very much a discussion point, and time will tell whether that is actually whether it is required or that we'll just go central bank to central bank. So, be interesting to hear the other guys' thoughts on that as well.
Right. Would you like to add a few words on that issue, Ainsley?
Yeah, certainly, and great insights by Michael there. I think one of the real interesting parts of cross-border payments has always been settlement, because obviously we typically have an FX component to them and have to go from one currency to another. And what's really, really very interesting is that the way that CBDCs are being used to solve some of the settlement conundrum. So if you look at the model being advocated by Finality, which came out of one of the earlier initiatives, where they're looking at each of the central banks holding pools of CBDC to enable them to move money between those central banks quite seamlessly, and therefore the integrity of the system, the settlement space, allowing the retail pieces to do pretty much what they want. We're seeing more and more stable coins coming into the settlement chain, but it still comes back to that fundamental question of how do you settle international transactions, and I think that's going to be part of the conundrum that needs to be solved. These might be a smart part of that, but some of the models being developed, such as Nexus, which is looking at domestic settlement at both ends using FX corridor providers, again, could be a smart answer. So it's potentially negating the need. But these currencies have a really interesting play in the wholesale market, and we'll see if they are an interesting part of the cross-border discussion as well.
Would you like to add a few words, Vijay?
Absolutely. I think what Mike was mentioning, interoperability is definitely one of the major point that needs to be seen how the time really tested. Everybody is in different stages of testing CBDC. It has been definitely an area of interest because real-time settlement always has been a key issue, which definitely gets settled. But when you talk about being cross-border with so many touch points, how do you really create that interoperability is the key. The scalability is going to be one of the things which needs to be seen. And that is where maybe all these systems are going to coexist for the time, for the different purposes, and we'll have to really see the final winner, or maybe different for the different use cases. We'll see different schemes for the different parts of world adopting to the different schemes. That is what we are going to see in the time to come. But CBDC is something which I definitely feel that with the finality, it definitely answers the settlement part very well. And that is why we see continued interest by almost all the major countries in this.
Great. I think we have the responses to our second poll in, and I have to confess one or two of them have surprised me. Anyway, the results are absolutely bring it on. More than 1 in 5, almost 22%. Almost there, getting on for a third, 31.3%. Quite the majority, 43.3%. We've still got a lot to do. And 3.1%, very honest. This isn't even on our radar. I wondered if anyone would actually answer affirmatively to that one. Anyway, what are your responses to these results, Ainsley?
It is what we would have expected, because ISO 28222 is just not about bringing a wrapper or being able to consume it. It is a wholesome change, because if you look at the payment value chain, whether it is on the channel, integration layers, billing system, core banking, advices, reconciliation, sanctions, you need to be able to accept that. That is where the value would come through. So if you're just being compliant with ISO 20022, you're not taking any real advantage out of it. It is a transformational change. So the idea is, how do you really think through the entire payment system, and it can integrate and work with the different system is going to be the key. And even for cross-border, the idea is, how do you take advantage of the data which is being used, and what you make out of it? That is the key. So I think it is where our industry is. Many of the players started to be compliant, trying to meet the timeline, trying to work out like to like or a wrapper kind of solution. But we still have a long way to go to really take all the advantages of ISO 20022. Harmonization is definitely going to be from the external system, which is going to make a big business case for the cross-border. But within the system, within the banking systems, it is important that the entire system is able to use the data, whatever is coming, and derive the real analytics out of it, use it for bringing more value, more secure payments to the end users.
Great. Ainsley, are you encouraged by the fact that more than 1 in 5 are pretty gung-ho and confident that they're ready?
Yeah, I mean, I think that's kind of where I expected. We saw earlier on that 41% have got their ISO native database, which I personally think is one of the keys to this. But it shows that there's a number out there that are not confident in their resiliency and their high throughput. These things come with the migration to modern platforms, microservices, cloud, and all the pieces that are difficult. That's why we're starting to see regulation creeping into this space. We've already got instant payment regulation. We're seeing also resiliency regulation, such as DORA in Europe, and there's some equivalents coming into the US where banks are really being pushed to make sure their systems can cope, particularly in a 24/7, 365 world. We know that the vast majority of banks out there are still sitting on core platforms, as they're called in the US, core accounting systems, mostly in Europe, that are not 24/7. At best, most of them are 18 and a half hours a day. They have to go down to get cleaned out because they're on old mainframes. Some of them still have tape attached to them that still need to be solved. They are the hard bits, but the bits are going to need to be realized and rationalized in order to get the benefits out of this change and this changing international market.
Michael, your thoughts?
Yeah, I think the numbers are really. Ainsley, your starting point of the day was that this is the start of, like, we've just gone through, I suppose, getting the plumbing and everything of ISO ready, and then we're kind of into the new journey. And a payments watershed moment, and I think this is just indicative of where we are starting to see the whole industry, that everyone understands that this is a big step change. And I think the numbers that we've just highlighted here, I think the 43% that are saying we've still got a lot to do, I think that's recognition that, yeah, there's still a lot of, I suppose, the transformation work to do. But I think what I think everyone has started speaking about, even the last year across the industry, is what do we actually do, and what's the value added services we can provide, the new products, kind of, and you know, are we talking about hyper personalization services, or we're talking about other different things that come with kind of the data that we have. So I think it's just started, and speaking with a number of, I suppose, larger banks that have spent many years in ISO already, I think there is a little bit of ISO fatigue out there, because everyone's a bit sick to death of kind of trying to implement ISO, but it is really just the start of where we're going to go to kind of the new way of working in payments, because it does it sets a framework for us to accelerate moving forward. And you know, it's taken us a number of years to implement this new kind of ISO framework and for the industry, but I think we're going to start to see new and exciting ways of kind of the way we work. And I think what we've highlighted today, that there's so many different ways that we're going to be seeing payments go across the globe over the next few years.
Right. Just looking ahead, perhaps 10 years' time, what do you see the future role of SWIFT being, and also how will the domestic automated clearinghouses connect with each other? Who'd like to go first with this one? Ainsley?
Yeah, bearing in mind, I'm not a spokesperson for SWIFT, and we are a SWIFT certified vendor, so I have to be very kind to them because they control part of my business. But I think the reality is that SWIFT have already real is dying. They've been on a transformation path for quite a while, including transformation as well as their business model. Swift Go is one of the ones that we've been mentioning all the way through. It's one of the potential contenders in this market. But what we also didn't mention is the fact that they've been transforming the way that people connect to the Swift network. They've been transforming the way that BICs and the BIC directory work. They've been transforming the expectations for people in Swift transactions. Vijay mentioned earlier on about the number of trading GPI, so therefore getting that response data back. So I think Swift already made a lot of the changes that are going to keep them in the game. Will they be the winner? I don't know. As I said, it's not necessarily the best that will be the one that comes out the back of this. So we shall see. They've been around long enough. They have a beautiful headquarters, which I'm sure they wish to maintain. And so I expect they will still be around in 10 years' time. They may not be the leader in the market. It's a possibility.
Vijay, I think you made a comment the other day about in future a central office in Brussels no longer being enough, and regional adjustments and synergies developing. Would you like to expand on that?
Absolutely. I think the growing importance of each of the region in cross-border is going to be the key, because it is a challenge and opportunity for the financial institutions. They need to really understand the law of the land. On soil is a reality, which we have already seen many of the countries are coming in. And in order for you to understand, you cannot have a centralized system which runs how the entire global system would work. You have to be regional, understand the nuances, make sure that you are able to bring the synergy together. But in order for you to share the principle, club it together, but at the same time, you have to be compliant with the law of land. And that is where being regional, understanding the nuances, what are the things that needs to be done. You have to be very, very clear about the data privacy and security. You need to be there for the dispute resolution mechanism. And with the kind of real time coming in, every part of the payments, you are expected to be available right there and work with the local players, local regulators. So it is important that you know the games now, be regional, try to understand what works and what are the things to be done. And at the same time, bring out the best practice, because Many of the global banks have been able to create the global. They have been able to reuse many of the real-time payment code for going live in the different markets. But you need to understand the nuances. It is like ISO 222. Language is same, but there will be different dialects. So you need to understand what are the synergy, what are the common uses that you have to take and combine it. But the localized nature, regional behavior is going to be the key for you to exist, because local players are also going to be innovative. You are going to be targeted by local fintechs, and every market today, if you look at any market, whether it is APAC, Latin, Africa, you have very, very innovative fintechs who are there to take your pie. If you're not compliant, then you don't have you'll not be in the business. So given that situation, you have to be innovative. You have to understand what is happening in the market, and you have to be thick in the game, working with the right set of partners. So every big player is trying to understand that is the reality of them today. They are trying to understand the regional nuances, the regional priorities, and bringing out their strategy so that they can focus regionally, but at the same time take out the best practices and bring out the synergy so that globally they can give the best services.
Right. I'm running out of time, so I'd like to squeeze in the last question and start with you, Michael. Do we really want to move money faster, both domestically and or cross-border always? Do you not want to move the money rather in real time so that fraud, anti-money laundering, sanctions screenings can be done? Sometimes isn't it good to have friction?
And
I think there's several questions there, actually.
Yeah, no, I mean, and this is always brought up in real time. And when we talk about real time frictionless payments, that is kind of it is always brought up around. And I think what so we've discussed here a little bit, some of the real time settlement is also added into that. So again, I think it's coming back to the beginning of the hour when I kind of talk about the customer experience expects that it's real time and frictionless. So along with that, we need to work out how to make sure that is secure. And I think it's already testament to what we're seeing across some of the domestic real-time payment schemes, that we're actually working out how to make sure these systems are real-time, and we actually are focusing on some of the confirmation of payee, some of the request to payment, and all these different ways of trying to reduce the risk of fraud. And I think as an industry, we actually are improving that for sure, because I think that the sanctions and the settlement real time is what I think is what we're going to start to see more innovation over in the short term, and I think that is a big focus area for all the banks, all the larger banks that are trying to settle because of that same key question that everyone's asking the same question, and so hence why that we are going to start to see more action in that space.
Right. Any thoughts, Ainsley, you'd like to add?
To quickly add to that, I think what we're seeing is a shift in the way that payments are processed. Previously, we used to take the payment in and do everything in the middle. We used to solve all of those issues as it went through the system because we had lots and lots of time. What we're actually changing now is the fact that we'll do all the checks up front, as Michael mentioned, those free pre-checks of payees, making sure that there's no real problems with that payment, that it's risked ahead of accepting it. But once it's accepted, once we've said, yes, that payment's good to go, it goes and the payment happens. I think that's really going to be the mind shift. And people expect money to move in real time.
I think we've got about a minute left, so just a quick takeaway from each of you. Stay with you, Ainsley.
Yeah, absolutely. So we've mentioned there's a lot to get done to make this realizable by banks. There are services out there that are making it possible, and we're going to see a big change in the coming years. So make sure you hang your hat on a lot of these different things, and do the sort of no regrets changes to your system, so you can take advantage of.
Excellent. Michael?
Yeah, I mean, similar. I think we're going to see wider industry collaboration to solve the big customer experience problem, as I open with. But interested to see with the new technology emerging, we are going to start to see bigger and better kind of I'll say cross-border payment real time over the next short term. I think it's going to come. It's coming faster than we think because of the customer expectation.
Yeah, we have to match the expectation that we have set up. Yeah, we have to match the expectation of what we have seen in the domestic real-time payments. We have to match the same level of customer expectation,
Sorry,
and
Michael,
that cannot be possible.
Not very good at this end, so I thought you'd finished.
That cannot be possible without all the players in the ecosystem coming together. So we have to see that all the players in the ecosystem come together and deliver the customer value.
Excellent. It just remains for me to thank each of our three speakers, and also I hope that the session has provided plenty of valuable insights. Thank you all for joining us.
Thank you.
Thanks, everyone.
Thanks.